world is going to have to live with coronavirus, I believe, for a long time, COVID-19 specifically, and people are going to have to defend against it. Our product is a defensive product. I believe our sales are only going to grow and grow and grow. We've only scratched the surface on this thing. We've only just started as a company, so I believe we have a big future, and certainly I'm here for the long haul.
Joining me from global biotech company Zoono Group is its founder and CEO Paul Hyslop. When I last spoke to Paul early last year, Zoono was a relatively unknown New Zealand-based ASX-listed emerging company with a market value of around 30 million Australian dollars. Fast forward 18 months and add a global pandemic, and the company that is known for its unique antimicrobial Zoono Molecule is now valued near 400 million Australian dollars and one of the year's standout performers. Paul has this morning released his full year results and rewarded shareholders with a maiden dividend. So Paul, welcome to TCN TV.
Thank you, Leldy.
And Paul, how would you describe the last year in a few sentences?
Well, it's probably the last 6 months, to be honest, and it's been frantic, busy, tiring, and draining. But things have calmed down a bit now, and we're back to focusing on our core business.
Okay, well, let's explore that more. You say frantic and busy. What's behind all of that movement? Looking at your FY20 full year results, which in a word are impressive. You just released them this morning. Your sales revenue surged to 38.3 million New Zealand dollars in the year from 1.8 million New Zealand dollars in the prior 12-month period. Now, this included exponential sales revenue growth in the second half of FY20. Now, Paul, is this sharp uplift in top-line revenue sustainable over the long term, and why?
Yes, look, I believe it's very sustainable because we're signing up a lot of global customers, international groups on long-term contracts, long-term supply contracts where they have to buy minimum volumes. The world now is all about being prepared for the next outbreaks, preparation, defense mechanisms, and that's what Zoono is designed for. So people have become a lot more aware that this technology is now available. So moving forward, I feel as though things are very sustainable, and I believe in the 2021 year, we will exceed our 2020 figures.
Okay, well, Paul, you say you believe things are sustainable, but higher top-line sales growth often comes with lower margins. This actually wasn't the case for Zoono's FY20 results. The company recorded a substantial improvement in its gross profit margin to 73.9% in FY20 versus 46% in the previous year. Do you think this margin uplift is a function of enhanced production efficiencies at the cost line, a willingness of the company's client base to pay higher prices for Zoono products, a bit of both, or perhaps something else?
There's a very high perceived value in this technology because it's long lasting. So once again, we can get a high price for the product, and Zoono in a lot of businesses actually becomes a profit center because a small amount of Zoono will go a lot further than large amounts of existing disinfectants. So although it's more expensive, it goes a long way and it's more cost effective. So once again, I believe that our margins are sustainable. We work hard to keep our costs down and our margins high. So yeah, and look, we're efficient. We're a small team. We're not a big team. We're not top heavy. I'd like to believe that we're an efficient group of people in Zoono.
Okay, Paul. Now, the full year net profit after tax of 16.7 million New Zealand dollars was also reflective of a buoyant second half performance. Many investors will ask how much of this profitability surge was off the back of product demand due to the COVID-19 pandemic. Can you provide any guidance here?
Well, it was largely off that, to be fair, but we're also grow in other sectors of the business as well. Sort of at the animal health is starting to contribute more and more to our top line and bottom line as well, and some specific.
So Paul, the 3-cent final dividend in Australian dollars is an extra bonus for Zoono shareholders who have also enjoyed an incredible rally in the stock price. The accompanying low dividend payout ratio of 31.5% though means that much of the full year net profit after tax has gone through to retained earnings. Does this conservative payout ratio reflect Zoono's board's desire to build a war chest to fund future expansionary capex and or perhaps M&A opportunities that appear over the short to medium term?
I like to have cash in the bank, and certainly it is good to have cash there so you can immediately take advantage of opportunities that might present themselves. So we will build our cash balance. Also, this is a maiden dividend. I'd like to pay a dividend every year, so I didn't want to set the bar too high the first time.
Well, I'm sure that will be music to your shareholders' ears. Another notable point to your results were sales contracts to very big companies like Qantas Airways. However, they will have some investors asking whether you now have increased reliance on several larger clients. What share of total sales is attributable to your top 5 customers, Paul?
Oh, look, I would say our top 5 customers would only be probably 15 or 20% of our sales. Okay, we've got a lot of customers now in the UK and the EU. We're building the business in the US. I think that's going to be tremendous for us, having that business again under our control. Australia's busy. Look, we're Middle East, India, Africa. We're making sales everywhere. So top 5 customers, Qantas wouldn't be in there. They're a good name to have in there, but from a purchasing point of view, they wouldn't be in the top 5. Some of our customers are very large and they wish to remain confidential, so we can't always talk about who our major customers are.
Certainly understood. Now, let's turn more now to your outlook. You have touched on some ideas for the future and plans for the future. Even before the COVID-19 pandemic reared its very ugly head, Zoono's products were performing at an ever-increasing number of sanitisation functions. In the growth and strategy slide of your FY20 results presentation, you also mentioned the company's diversification into the animal health market sector, specifically in the pig and poultry subcategories. Now, Paul, while animal health only accounted for 5% of Zoono's revenues in FY20, what is the size of the potential market here? And how quickly will the new animal health related regulatory approvals that Zoono is now working through with a number of countries get ticked off?
Well, look, every country has different approval mechanisms, and it's just a shame that there isn't more consistency, but we're working through them. We're putting the building blocks in place. We're collecting tens of thousands of pages of data on food conversion ratios in animal health. And we are starting to see that Zoono has the potential to become a major profit centre for pig farmers and poultry farmers. So we're very confident that that percentage of 5% of revenues is going to grow and grow and grow and become very significant in the years to come.
And Paul, while looking forward, these excellent FY20 results certainly will inevitably have investors asking whether this result can still be repeated or perhaps better still exceeded in FY21. Will you be providing an updated profit guidance at the company's upcoming FY20 annual general meeting?
No. But I'm very confident that we will exceed expectations.
Well, on that note of confidence, Paul, thank you very much for running us through your full year results this morning, and all the best for the coming months and year ahead.
Thank you, Lily.
And thank you for watching. Now, if you like what you see, like and share the video, subscribe to TCN TV, or drop us a comment. Tell us who you would like to see next and what you would like me to ask them. Or if you're an investor, please send us an email so we can keep you in the loop with the latest ideas to empower.